Hey guys, Scott Neill again here at Neill Insurance Brokers. Hope you all are doing awesome. I just did a video on small business owners and making sure they're fully protected heading into 2026. And this message is for my homeowners and auto insurance drivers that have personal auto use. So basically, this video is to go over some of the things to look for in 2026 that a lot of companies are cracking down on. And basically you want to make sure all your I's are dotted and T's are crossed. And so let's dive in. So home insurance has changed a ton in the last 5 years with COVID. 2022 to 24 really was a rough year for insurance. As y'all know, rates went up, coverages were hard to get. Homes were hard to place, and with carriers, they were declining for whatever reason. And they're opening up a little bit. However, there's a lot of things insurance agents aren't telling their clients that are backfiring, and clients aren't getting protected, and they think they have the coverage and they don't. The biggest one is deductible changes. So, we've looked at several policies this week already. It's only the first week fully into 2026, but we're seeing people with 3 or 5% wind hail deductibles that they didn't even know they had. They thought they had 1 or 2%. As y'all know, 1% is really irrelevant in Texas, especially in DFW. It's impossible to find. No one really offers it anymore. It's 2% minimum wind hail. But a lot of agents, to sell on price, because that's 95% of agents out there, that's how they make their money, is they sell on the premium, and that's what people look at. And they just send them a PDF, and the client looks and sees, oh, I'm saving $800 a year on my home insurance. Good, great. Well, that could be a 3, 4, 5% deductible on your wind and hail. Also, besides deductibles, we're seeing roof exclusions, ACV, which is actual cash value. You want to avoid as much as possible. Now, if you have a 10, 15, 20-year-old roof, you're out of luck. You're going to have to pay the depreciation on that, and you won't get your full roof replaced because most carriers are at 10, 15 years, and then they start depreciating on a schedule. I agree with that because roofs in DFW last, I think the average is 7.5 years. They're getting replaced every 7.5 years. That's why rates are so high, because roofs are crazy expensive, and there's no checks and balances with contractors. They just charge whatever, and making 60% profit in some cases. Maybe they're making 30, maybe they're making 60. I don't know. Some roofers brag about that, how they make so much coin in roofing because it's just a gold mine. That's going to get cracked down on. Safeco is actually one of our carriers, and heading into 2027, they're going to start capping how much they're going to allow payment for a roof. So, you may have a bid, you only do one bid, it's $18,000 for a roof. Safeco may come in the future and say, hey, we're going to cap at $12,000. That's based on, a architectural shingle roof and how much it should cost. That may hurt profitability for the roofing company, but that's what got us here in the first place with rate increases. So I'm looking forward to that. And, that's a big thing that a lot of people are talking about. So depreciated value. If you can, try and get a replacement cost roof, RCV, replacement cost valuation. Also, make sure you have separate structures covered. A lot of agents we see do like the minimum, which is 5% of your dwelling. So, if you have a $500,000 home, you may only have $10,000 in separate structures. If you got a beautiful hardwood fence or a wood fence, cedar fence, and like a wrought iron facet, like a gate and stuff like that, and a swimming pool, that ain't gonna cover 10 grand ain't gonna cover, 20 grand ain't gonna cover that. You need $150,000 to replace all that. And that's why, separate structures is a big concern now, because it is more of an expensive coverage, but a lot of agents are excluding it or not covering to the full amount. Next is basically your liability limits. Making sure if you have a swimming pool and you have a diving board, a lot of companies may not do an inspection right away. And if you have a diving board, a lot of companies exclude that, or a slide or whatever. Or they may exclude dog bite liability. If you've got a pit bull or something, that may be excluded if that dog bites someone. There's lots of little things to look at. There's more on home insurance I'll go into in another video. Let's dive into auto insurance. What we're seeing now is a lot of people think if they get in a wreck, they total their car, it's going to be replaced, at full replacement cost. All vehicles, unless you go through Haggerty and you've got like a Lamborghini or something, you can do a full replacement cost on it, or agreed value. But your auto insurance is going to depreciate the value of that vehicle. So make sure if y'all do get a new car, you get gap insurance through the lender. It's usually cheaper than going through an insurance company. We can do it. But typically when you close on a vehicle and drive off the lot, you'll have your loan paperwork and your gap paperwork and your warranty and all that. So make sure you get that. Another big thing is one of the nation's largest insurer got in trouble for this recently. There's a class action lawsuit. Their agents were not adding youthful drivers. They were saying, if they're under 25, we don't need to add them. They're just part of the household. That's not true. There's permissive use. So if you have a 16-year-old that has a permit, you can add them and it won't surcharge you. There won't be a rate increase. But after a year or when they get their license, whichever happens first, they have to be rated as a full-time driver. I don't care if they're 17. And yes, your rates are going to go up because they should. Young drivers are on TikTok. I was driving the other day and I saw a kid doing literally a TikTok. He was filming himself on a TikTok doing all this crud, and it's just crazy what kids are doing nowadays. So make sure you're watching out for that. Make sure your kids are fully rated. If they have a license and they're not on the policy as a listed driver, the carrier could likely decline that. That could be an issue. I don't care what any insurance agent says. If they're saying they don't need to be rated as a full-time driver with a license because of their age, they're full of it. They're trying to keep the premium low because they're price shoppers and they don't want to lose the premium and lose the account because they did it incorrectly. So that's the biggest one. That's really it. Just make sure you're protecting yourselves and looking into your coverages. Do a review every year. We try and reach out as often as possible. But I think I've dived into what the biggest concerns are we're seeing in the market, especially when we're shopping insurance. So thank you all so much. If you want to reach me, it's neilinsurance.com, Neill insurance.com, or you can call 682-237-7975. Thanks, guys.